with midterm rentals, I think there's still a lot of that discovery to happen. And so that's why I'm pretty bullish on it.
If I was to get into this space today, what do you recommend that I do? Let's say I'm an investor. I have some experience. I have some long-term rental. I think I want to get into this space because obviously I'm interested in making more money. Where do you think I should start?
My advice would first talk to somebody who is in it themselves, whether they own one or run one for someone or several, someone who's involved, and just get their advice and their take on it. But really, I think what you'll find is partnering with a professional similar to my company could be the way to find the right profitable property and take advantage of really the depth of knowledge of where people are booking, what they're paying, what properties are performing really well and why. And once you've got that data and you know where the demand is and where the supply isn't there yet, that's where you make a successful investment. So you could find a realtor in your market that does that. You could find a short-term rental manager in your market that does that. You could also find what I help some folks with is we have a group of investors and we invest our money together. And so any of those would work, but I really would recommend going at it alone or without somebody that has experience and can point you in the right direction at the right property.
Do you own any of the 125 unit that you guys manage?
Yeah, I'm a part owner in about 25 of those. So there's some that I own individually, but really the majority of those are owned in my fund. My group of investors have formed together a couple different funds. So that's where we own most of those.
So if you, the fund, were going to look for property today, what do you look for?
Good question. What I would typically do is go back into my property management software and find which properties that I already have that are performing really well. And right now, what that is a 4-bedroom, 2-bathroom plus within 20 minutes of the Intel factory. And we're seeing almost unending demand for that type of product. So I would then look, okay, well, what can I buy that for? Look at some other options and compare those ratios. After comparing those ratios, then we would look at what's available in the market, see if there's anything for that price, and make a plan. And that's what I've been doing.
This is different than long-term rental, right? When we buy a property, we also have to factor in the cost and furnish to get it started up. How do you manage that? Because do you actually cash flow instantly, or does it take some time to recoup your upfront costs before you can cash flow?
One of the things I love about this business is there's multiple different strategies and you can use different ones. You can combine different ones. One of the strategies that I've used since I got started in real estate was BRRR. Yeah, I'm sure you know that acronym of buy, renovate, rent, refinance, repeat. That strategy is essentially what most of my investors and I use here in Columbus. We will find the end property that we want, which, like I said, for instance, in this one part of town, it's a 4-bedroom, 2-bathroom. That's really nice. And we know what it will earn as revenue. We know what it's worth for us when it's done. And then we typically will look at one that needs that renovation to get there. And so, no, to answer your question, in the last couple of years, almost every property I've bought, we put around 10% of renovation into it, 10% of the purchase price. And honestly, we're putting a very nice furniture package in those large houses as well. So that project, typically from when we purchased the property, we're seeing 3 months, maybe 4 months on average of preparation and renovation and furnishing and photos and marketing. And then we're ready.
Are you looking to grow the fund?
I am. So anybody who's interested in being a part of this, I would love to talk with you.
Give us a little bit high level of what the purpose of the fund is and what's the use of it.
Yeah. So as I've gone along in this business, I found lots of different needs for short-term rentals, midterm rentals. But as I kind of alluded to earlier, we found a very good need when there's a new factory being built. There's a lot of people coming in and there's not many places to stay. So for instance, in Columbus, Ohio, where the Intel factory is being built, there are 14,000 construction workers showing up to a cornfield every day. And there are only 7,000 hotel rooms in the entire city of Columbus. What we see is a huge need for furnished monthly rental near the factory. So what we also see is these factories, they're being built in a agricultural area. Like I said, it's a cornfield. It's zoned agriculture for the entire area around that. So what's happening is if you look at where these other factories have already been built in places like Phoenix or Chandler, Arizona, it was built in an area where there were no housing, but then 10 years down the road, lots of brand new housing was popping up, right? So in Ohio, the reason that's going to take a while is because zoned agriculture, you can only build one house every 3 acres. So what it'll be is it's going to take 2 or 3 years. Right now, there are hedge funds and Wall Street firms that are buying the farm fields, and they're going to build new build housing, and they're going to sell that for quite a high price, but they aren't going to be able to sell their first house for 3 years.
Okay.
So my plan in my fund is to buy existing housing that exists right now, renovate it, rent it out for that 3 to 5 year period as the factory is being built. And then when the factory is done and the full-time employees are moving in, they're going to want to buy those houses. So I have an entry plan and an exit plan in about a 3 to 5 year timeline. And in the meantime of that, it should cash flow really well to transient workers and transplant families. But once the factory is open and the permanent workers are moving in, then we will sell those properties to them.
Do you have a return, a percentage that you aim for, a cap rate? What do you aim for?
Yeah, we are aiming for a 10% cap rate. And for some of our properties, we've hit that. Some are a little below, but that's typically what we're looking for. We're looking at properties that the gross revenue is 20% of the purchase price. That's where we start. If it doesn't meet that, we don't really necessarily consider the property. And, you know, in this area, we're looking at really good appreciation. Happy to report that the little town where we're buying in, Gahanna, Ohio, is now for the second year in a row, the hottest market in the United States.
That's amazing.
By Realtor.com. And so we see that as it's appreciating really well.
I want to clarify something that you said earlier, 20% on something.
Gross revenue.
Gross revenue.
The gross annual revenue being around or over 20% of the purchase price.
So if you buy a house for $100,000, let's just say, you want the annual gross revenue to be $20,000.
That's right.
Okay. Oh, that's good. Do you have plans to expand outside of Columbus?
I do. I'll be honest with you, V. I'm so excited about this opportunity of furnished rentals near a new factory that's being built, that what I actually see is this happening in other places like Phoenix, like Dallas, like, so by the way, the CHIPS Act that is paying for Intel to build this factory, there's 3 or 4 other factories around the United States. Those cities I just named all have a big factory being built. I see this opportunity near electric EV battery plants. There's Honda just is opening one in Dayton, Ohio. We're interested in that area. What we see is when any of these high-tech plants are coming in, they're typically going in an area where there's very low population, and the population is going to grow a lot. And so I've created this fund to take advantage of this opportunity in Ohio, also wherever else we see these opportunities.
That sounds like an amazing opportunity that you acquire property, you rent them out, and then once the factory is done, that should cause an increase in the populations, right? People come to work and they may need to purchase the house, and you could then cash out by selling.
Right. This is one of the first investment theses in my career where there's an entry and a clear exit. And you know what I mean? Like, as opposed to, well, it could go this way or it could go that way, or we don't know when it's going to exit. It seems clear.
I'm very excited for you.